Hey everybody, Bill Prince here again. Welcome to week number 8 of Business Simulation Workshop. Halfway through the class, our week after this one will be a fall break, so everybody will get to take a little bit of a rest from sensors and simulations and all that good stuff, but we do have one more week to go before that. So this week, again, make sure that you review your course objectives and this week we're going to be spending time in our professionalism assignment talking about issues related to personality types in the workplace, which always can be quite challenging, interacting with and managing different kinds of folks. And then our readings this week will address business level strategies, and you will get to begin competition round number 1 of the simulation. Now this will play very similar to, well, not very similar, identical to the practice rounds. The difference between the competition and the simulation and the practice rounds in the simulation is that in the competition rounds you will be playing over 8 rounds as opposed to just 4 in the practice round. So a little more strategy is involved, a little more longer term thinking is going to be involved. So again, over the last 4 rounds, a number of you had fairly successful companies. Some of you had moderately successful companies, and some companies were just totally upside down. And again, nothing that I don't expect to see in these things. This is a relatively challenging class, particularly when you don't have the opportunity to work in teams, as often happens in the seated classes. But by and large, I'm seeing some pretty solid decision making, but the mistakes tend to be the same. And I want to talk about a few of those in this video. Let me back out here just a sec. And again, I do want to point out for you all that I did post in this week, I believe, yes, October 7th through the 13th, a couple of competition round walkthroughs. So again, hopefully these will make a little more sense to you now that you have the context of having played a couple of simulation rounds, 4 simulation rounds to be exact. And so hopefully some of this decision making and so on will make a bit more sense to you than when you watched the practice round walkthroughs. So please make sure to watch those, take notes, and that kind of thing. And I think that you will find it to be most helpful. I apologize that last week I had excuse me, that I had to cancel the Zoom meeting. I had sort of a last minute emergency arise that precluded me from doing that. The last couple that I've scheduled, we've had a couple of takers, not as many folks as I thought would. So what I guess I'm going to ask you to do is, if you're interested in having a Zoom conference with me about your performance on the simulation, and again, maybe you want to get a competition round under your belt before you do that, but just message me, and I think it may be easier just to try to set something up with you individually as opposed to group. Again, if I was getting large numbers of folks wanting to participate in the Zoom office hours, I would probably just throw that open and invite the whole group. But again, only really had just a few takers, so I am happy to just we'll try to schedule some one-on-one Zoom video conferences with you if you would like. Let me know, and I'll get back with you, and we can work on getting something scheduled in that regard. Another thing that I would mention is please make sure that you are doing the SWOT debriefing assignments after each round. Even though you might not have stellar performance in the competition itself, you get most of your points in the class by analyzing your round. And again, you can really learn as much through adversity as you can through success in the simulation. But if you don't submit those reports, that's 30 points a week that you are not receiving. So please make sure to get those done. And those are usually due, well, not usually, they are due on Wednesday nights following the processing of the round on Sunday. So please make sure that you get that done. Let me pop up Capstone here really quick. Again, I've sort of got you set up with a couple of walkthroughs where some of this will be reiterated and put in the context of complete rounds, but I kind of wanted to go through a couple of the screens with you, and I apologize, you may hear my dogs barking in the background. They're fired up about something today. But in any way, just go over with you a couple of areas on each screen where I am seeing a sort of consistent issues that I think are relatively easy to correct. So let me pop up our decision page here, and there we go. Let's get to R and D. There we go. So remember, this may look mysterious initially in terms of these circles and where do they drift and all of that kind of stuff. But, here's the takeaways that I would like for you to have with regard to your decision-making page on research and development. First of all, remember these circles throughout the course of the simulation are going to drift downward and to the right. And as the simulation moves along, these circles, which are all kind of diverged upon one another at this point in time, are going to separate away from one another and become much more distinct markets and things of that nature. Drift rates, let me close my things popping up there. Drift rates are predictable, okay? And remember that you're able to predict where those are going to be drifting in terms of performance and size by going to your industry conditions report. So you want to check that out each round so that you can remember, the numbers that you need to kind of look at in terms of where these segments are going to drift. So for example, each round, if it is a performance and size calculation that you're doing on your traditional product, performance is going to increase by 0.7 and decrease -7. So that's the drift that's going to be going down on your perceptual map. That doesn't always mean that's exactly where the product's going to be, but that will tell you where the circles will be that you will then want to place your product within. So always make sure to look at that. Let me go back to, there we go. Go back to this again. So again, remember that to calculate that drift rate. So again, what do we say? +7, -7. So again, as a starting point, we started here at 5.5, so 6.2. And then we're going to decrease by 0.7, so 13.8. Okay, I'm going to leave mean time before failure alone. There we go. And see, that's got your product drifting down there. Now, you might want it to be a little more advanced, in which case you would change these a little more drastically. You might not want it to go that far ahead, in which case you'd ease up a little bit. But again, in looking at what I did, this is a pretty good product. Again, it's coming out in July. I like to have my products, if at all possible, come out in June or July of each year, because that gives you 6 months to sell. It's coming out at 1.8, which is exactly almost the age that the people want it. So it'll hit 2 years of age in the upcoming year, in September, and then relatively low R&D costs. Okay, so again, you're going, well, what do you mean? How do we know what the age and all that business is? So remember, go look at your capstone courier. Go to your traditional segment. You'll want to do this for each and every one of the product segments that you're operating in. And hopefully it'll pop up here. There we go. And there it is. So here is the buying criteria. This is what your customers want as of the end of the current round. Okay, so keep that in mind. This is not predictive of the next round. This is telling you what your customers wanted as of the end of round 0. Okay, so you're moving into round 1, which means then that the ideal position is going to be +7, -7, or thereabouts, different than what is here right now. Age is always going to be the same. Your customers in each segment, the age that they want the product to be will always be the same too. And then price, as of the end of round 0, which is where you're starting, they wanted to pay between $20 and $30. The simulation each and every week is going to drive those prices down 50 cents. So as you're setting your prices for round 1, you're going to want to price your traditional product between $19.50 and $29.50. Okay, and then the following round, when you're setting your prices, it'll be $19 and $29 and so forth. Customers will not buy a product if it is priced over the maximum amount. They simply won't. So it is important to stay within that price window. And again, remember, it's going to drive down each and every week 50 cents. And so again, with your traditional products, looking at this tells you that 70% of the decision to buy is going to be on the age, which we have at 1.8. They want 2. It's going to hit 2 during that year, and the price. Again, you're going to want to set your price between $19.50 and $29.50, okay? And you'll do that same analysis for each and every one of the segments, all right? Now, going back to the R&D page, another common error that I saw on a number of the simulation decisions in the practice rounds was you played around with your low end product. That is acre, okay? And again, I cannot stress this enough. Leave acre alone for the first few years. Don't make any R&D decisions on that. Why is that the case? Well, let's go look at our buying criteria. Let's get to our reports for our low end segment, okay? So as we look at the low end buying criteria, they are most concerned about price, $15 to $25, and that's 53%. So, more than half of their decision is going to be based on the price. So again, as you set your prices going into round 1, you're going to want to set it at between $14.50 and $24.50. Then the ideal age is 24%. So 77% of the decision to buy a low product is going to be based on the age and the price. You control price in your marketing page, and then age is determined by what R&D you do. And remember that the only way a product gets old is to leave it alone. If you make any changes to R&D, that product is going to come out half again as new. So you don't want to make any R&D changes at all. So just leave acre alone, okay, until it gets to be around 7.6 years of age, and so forth. So you can see here that at the beginning of round 1, this is acre where my little arrow is pointing at right here. The product starts out at 4.6, and then it'll be 5.6 years old at the end of the round. Okay, so a year has passed. Watch what happens if I make any changes to this. So let's say I'll drop the size down to 16.5. Okay, there we go. Hit recalculate. Now watch what happens. See, all of a sudden, I've got a product that is 2.5 years of age, which is a heck of a lot newer than they want. So again, if I do nothing to that product, so let me bring that back to 17. Okay, hit recalculate. Maybe. There we go. I've got products as 4.6. It'll be 5.6, and then the following round it'll be start out at 5.6, go to 6.6. So leave acre alone for at least 2 or 3 years. Don't mess around with it. And I saw a lot of folks do that. And then just engage in the same analysis that you would for each and every segment. Again, looking at buying criteria, and so on and so forth. And again, you want to get those products positioned so that they are drifting downward and to the right for the most part. Okay, so that was pretty common. Those are some pretty common mistakes that I saw made over the course of the simulation in the practice rounds anyway. So let's go to marketing. I didn't see a whole lot of real major issues made here, frankly. Other than some periodic forecasting ones. So and pricing. Okay, so again, remember on pricing. as you price those products, remember that when you go to that buying criteria and you see, $30 to $40, you are actually seeing $29.50 to $39.50 because that price is being driven down each and every round. So make sure to take that into consideration in setting your price, because customers won't buy products that are priced over that maximum amount in the buying criteria. So be very careful about that. And then forecasting. Remember the way that you want to come up with your forecast. And really here, this is just kind of a number. It'll have an impact on your estimated revenue, but this isn't where you're deciding how many products to produce. But remember, the way that you do forecasting is this way. So let's go back to we're at our courier. Here's our low end statistics and buying criteria. For each segment, you want to look at your statistics, whether it's the low end, the high end, performance size, what have you. And this tells you that last round, 8,960 units of low end product were demanded and sold. So that's your industry demand, is 8,960. Okay. Next segment's growth rate for that is going to be 11.7%. So to figure out your forecast, what you want to do is take 11.7%, multiply that by 8,960. So let me pull out my handy dandy phone calculator here, maybe, if I can pull that out. Or maybe I can pull one up. Let's see if I can pull the one up from our... where is that? Hello, I know it's here someplace. Calculator. Let's see. Yeah, I know I've got one. There it is, right in the center. Okay. So, that didn't help. I was hoping it would pull it up on that. So let's see, we got 8,960 times 11.7. Okay, so 8,960 times 11.7%. So that comes out to 1048. So then I want to take 1048, because that's our increase in demand. I want to add that to, what did I just say? Losing my mind here. To 8,960. Whoops. So plus 8,960 equals 10,008 units. So that's our estimated demand for next round. So 10,008 or thereabouts. So that then would be your total industry demand for round one. So then you need to figure out, well, what of that 10,000 or so units do I think I can sell? Again, you're kind of starting even, so I always think maybe a good way to start is just divide that 10,008 by 6, because there are 6 other teams. Because right now, if you look at this shows that your actual demand or your actual market share equals your potential market share. So I would just divide by 6. So let's go back to our calculator there. Okay, divided by 6 equals, so 1,600 units. So you may be able to sell around 1,600 units of your low-end products. So let's go back to our forecast, 1,600, okay? There. So I would just, and again, you go through that same calculation with the multiplying industry demand times growth rate divided by 6, at least for this first round, to give you a pretty good ballpark figure of where you need to be, okay? So pricing and then over or under forecasting were the biggest issues that I would see in the this page. So let's move on then to, let's hit recalculate there, just to see if that'll do anything. There we go. Because then I want to take you to the, there we go, to the production page, all right? And there we go. A little slow today. Okay, so let's focus on this because this is where I did make a change. So you can see that I estimated, okay, I'm going to sell I think I can sell 1,600 units. Then I have on hand 39 of them, and then it tells me what my production schedule is. Okay, so this is where I would enter in how many I want to make. Now here's the formula that I use for determining production, how many I actually want to make. So go to your calculator again. Okay, I'm just going to go to my phone because it's quicker for me, I think, to do that. Okay, there we go. So what I'm going to do is I'm going to take that 1,600, which is my forecast. Okay. Then I'm going to multiply that by 1.15. Okay. That's a figure that I came across in some reading someplace or the other that said that's a good figure to multiply your unit sales forecast by in calculating your production schedule. So I've always done it. I couldn't tell you exactly what that's related to, but it's generally worked for me. So take 1,600 times 1.15, and that comes out to 1,840. Okay. Then subtract from 1840 your inventory on hand, which is 39. So that would tell me that I want to produce 1,801 units. And of course, it's the numbers that you produce that contribute to your inventory, not the numbers that you forecast, but the numbers that you produce. Okay, so I put 1,801 units there. So that's how many I think I can sell of that next time. Okay. And again, that's just ballpark. You could say, I don't think I'm going to do that well. I think I'm just going to sell 1,500. But it gets you into the kind of the ballpark of where you need to be, okay? So then scooch down here a little bit, and you can see right now that I don't have enough first shift capacity to produce that. So I'm going to have to go into second shift a little bit, which is okay. But I'm going to need to buy capacity because, again, demand for low and traditional products continues to increase pretty significantly over the course of the simulation. So I'm going to buy 400 units of capacity. Okay. I'm also going to want to buy. I'm going to buy 2 units of. Whoops, not 52. I'd never be able to afford that. I'm going to buy 2 units of automation because, again, as we look at traditional and low, these are very low margin products, and so anywhere that you can save costs, it's best to do that. So I always try to increase fairly significantly, at least until I get up to 8 or 9, not my inventory on. Okay, sorry about that. Had to pause a little bit, but anyway, I think what I was saying is that these are fairly low margin, so you really want to get your automation up. Don't worry so much about these products because again, you can make up for margins by charging more. Okay, so now let me get that correct. I'm going to make that not 180, but there we go. So let's see what happens. I may have over purchased here, but we'll double check. I did. I saw. So I'm going to take that down to just 6. And again, you can see over here. I'm pointing with my finger, which you can't see. Here is the max that you can invest this round, and you can see that I'm over that by a few $1,000,000. So let me take this down to 6.0, and I'll take this down to 5.0, and let's see if that gets me okay. Yeah, there we go. So I actually have a little bit more money left that I could play around with. But again, make sure that you have sufficient capacity. And remember, when it comes to capacity, first shift is going to be listed. Is going to be up here. Well, here's your first shift capacity. And then you have the ability, if you were to use total second shift, which is obviously very expensive, and in the long run, it's better for you to buy first shift capacity, I believe. But again, blowing it out fully, 3,600 units, 2,400 units, 1,800 units, 1,200 units, 1,200 units. So that's sort of what you have available. So slowly but surely, buy capacity in those lines that you want. want, and make sure that you finance those. So that gets us to our next page here. Let's see, we're going to go to decisions. We're going to go to finance. I'll come back to HR here in just a bit. There we go. What I saw happening for many of you throughout the practice rounds is either you were not financing at all. You weren't issuing stock, you weren't issuing bonds or current debt, and the order that the simulation suggests that you do it in is stock, current debt, bonds. But you either weren't doing it at all, because I would go and look and you'd have these giant emergency loans, and then I would go look at your finance page and you didn't issue stock, you didn't issue bonds, you didn't issue current debt. The only thing listed on your sheet in terms of debt was the repayment of the previous year's giant emergency loan. So it is really important to engage in financing activities. Again, this is not your money. Remember, this is pretend money, so you don't actually have to pay this back. The other mistake that I saw people do, and again, this gets a little confusing, and I don't know why the simulation does this, but when you see here maximum stock that you can issue, normal people would read that to be $13,700. Well, that's not right, because you need to really add 3 zeros after each and every one of these. So really you have $13,700,000 worth of stock to issue. And so what I would see some people do is they say, well, I'm going to issue 2,000 or 20 shares of stock. I see you do this, or I'm going to borrow 150. So that's $150. That's 20 shares of stock. Obviously, that's not enough. So make sure that you get your zeros right, and you'll know that by something I'll show you here in a minute. So you can see here that, again, I've just sort of done a partial R&D on one product and bought some capacity and stuff, and you can see that my estimated cash position for the end of round 1 is a big giant red number. We do not want a big giant red number here, so I'm going to have to engage in financing, okay? Because I bought capacity, I bought automation, and again, I would buy that stuff the first few rounds, leverage the hilt out of it, because again, it's going to pay dividends to you down the road, and you can always pay this money back as you generate sufficient cash flow with products. So you know what I'm going to do? I'm going to issue maximum stock. So I'm going to put 13.7. I'm going to issue the whole kit and caboodle. Whoops, that's too many. 13,700,000 shares of stock. All right, let's see what happens. So I recalculate. That should get me down to about 9 million or so of debt, right? Well, I don't know what happened there, actually. Oh, I know what I did. Okay, let's try that again. 13.7. There we go. All right. Okay, so let's try this again. I have no idea why that is doing that. Let's try 10 and see if that'll... 10,000. Maybe the comma I was putting in. Yeah, that was it, the comma that I was putting in. So let's take that to 13.7. There, let's try that again. Okay, so you can see that then has taken my cash position down to a negative $8,800. So then I'm going to borrow about 8 million current. Okay, looks like 8,000 is 8 million. Okay, recalculate that. Okay, that takes me down to there. And then because I want to have, I want some wiggle room, just in case I've made a mistake or something like that. I don't want to be playing it too close to the vest. You can see that I have the ability to issue $18,994,000 in bonds. So I'm going to issue $10 million, looks like 10,000, in bonds. And that should get rid of my red and give me some black money to play with. Yes, it does. So So you can see now my earnings per share, that's taking a little bit of a hit. That's okay. Not really concerned about it at this point in time. So you can see that I have finance. I've done some R&D. I have bought capacity. I've bought automation, and my I've got a positive cash position going into, or at least the end of next round. I should have a positive cash position and not have to have an emergency loan. So really, really pay attention to this finance. It's not all that hard, but you've got to engage in it. And again, make sure you get your right number of zeros and so on and so forth in there, because again, you don't want to be shy about borrowing. Going to go back. HR, I do not believe you can make decisions first round of the competition. You can't. This will kick in, I think, the second round, and then total quality management will kick in round 4, which we'll talk a little bit about closer to the time it kicks in. But really, about all you can invest in is training and recruiting costs. Basically, if you spend money on recruiting, in theory, you're going to get better employees who, in turn, will be more productive and drive your labor costs down a little bit. Same is true with training, that the better trained your workers are, the better they will be and the more productive they will be. However, when you send workers to training, that takes them away from your complement, and some second shift may have to kick in. But we'll talk a little bit more about that as we go into the simulation. So again, those are just kind of the common mistakes that I saw some of you make during the simulation itself. So I think that hopefully, if you kind of pay attention to those, that'll solve a lot of what ails you. Pay attention to the walkthrough videos. Take notes on those if you need to. And again, you're never going to have the exact same results each time, because each simulation is a little different. But I think if you follow those decisions that I've put in the walkthroughs, that should get you at least in a positive spot. So again, if you have questions, comments, or concerns, don't hesitate to contact me. Again, if you want to set up a Zoom, let me know and we will get that arranged. Other than that, good luck as you jump into the competition, and we will visit with you again next week. So take care.